surviving that carnival ride. And while most retail traders, people that use logic that has no bearing on why price is going to go up or down, they will subscribe to the view that, hey, their techniques, their models, even my concepts in the hands of other people, they may sell the idea that, hey, look, I got it all figured out. And as I mentioned, every single time I've ever talked about non-farm payroll, I said the same thing Friday. I said, you don't know. No one knows where it's going to go. And inviting ruin, inviting the potential for the market to just start spooling and running way beyond where you think it's going to go. Ignoring that underlying risk, ignoring it, discounting it, thinking it's not going to happen to you. Not this time. You're romancing the uncertainty. You're only looking at it from the perspective that it's going to be good for you. It's going to be good. It's a good thing for me to do this. That's what you tell yourself. That's what you're thinking. In reality, you're most likely anxious. That's why you never said anything in front of the public about what you were doing. But when it works, you're going to come out and show your market replay execution. Look at this. Look what I did. I killed it. If you were that confident, you would have done it live. You would have done it in advance. And the fact that you won't do that, or that you see other people doing it just like that, it's cause for concern. You're spending too much time doing the wrong things, worrying about the wrong things, and romancing the uncertainty, only seeing it through rose-colored glasses as an expression that you can only see it your way, or the good side only, and not realizing the underlying risks that are associated with it. So I want you to think about what you watched this week. I want you to think about how we were able to navigate at the beginning of the week on Monday. I told you what the weekly objective would be. And once it delivered to it, guess what? That was it. We were looking for that weekly buy side and balance, sell side efficiency to be traded down into. And it was just off by a little bit before closing it entirely to the downside. And that's all it did. I want you to think about how I took you into the charts live and showed you executions, buying and selling, emphasizing that the downside was really where we were focusing on. That was proven to you on Monday's top-down analysis. But buying and selling, executing on a short-term basis, just trading the intraday volatility, using any immediate lower time frame, 15-second or 1 minute fair value gap, and conditioning yourself to just see it and execute on it. See it and execute on it. Place a stop and a limit, and submit to both. Whichever one happens to be hit first, that's what you're going to subscribe to for that exercise. And you desensitize yourself. See, that is the right thing to do. Not going in thinking it's always going to be an outcome that's favorable to me. You need to remove that thought process entirely. You need to remove the necessity for the outcome to be positive for you. Because if you focus on that in the beginning, while you're discovering who you are, what you're going to do to wreck yourself, before you discover your character flaws, every one of us have them, you won't grow efficiently in your understanding. You won't have an understanding of what you're trying to become. Because in the beginning, you really don't know what you're trying to do. You don't know what your ending model is going to be. You don't know how you're going to perform as a career trader. You're not going to understand the things that you don't know yet, because you don't know what you don't know. And that uncertainty for you isn't being romanced. It's being explored. It's being navigated. Much like Christopher Columbus, who set out and discovered America, whatnot. Imagine how scary that would have been for him. Do you think he was trying to talk himself out of it all the time? Or was he thinking, how amazing is it going to be once I discover something new. And he submitted through the process of discovering it, getting out there in the uncharted waters. The hard right edge of every single chart, every single one of them, that hard right edge, that's the retail drowning pool. You see so many traders now. Go on social media. Look, there's stories of regret and woe. I blew my accounts. I lost my funded account. I failed the combine. I don't know what happened on Friday. Why was the market so hard on Friday? Why was the market so choppy this week? The market was trash this week. That's the retail drowning pool, that hard right edge. They want to believe in their fairy tales and myths about why price does this and does that and what indicator causes it to go up and down. But none of them spend the time, like I've been teaching you, to focus on when it's going to be less likely for you to succeed. You're not romancing the uncertainty. You're removing any emotion about that hard right edge. You're looking at, why would price go up? Why would price go down? Who is it going to hurt? Because that's what this game's about. It's about taking. It's about overtaking and devouring. That's what it's all about. It's nothing else but that. And your indicators are going to crunch numbers and spit out some data that you're going to subscribe a religion to. If you're a retail-minded thinker, you're placing faith, almost a degree and level of religion, over these indicators. Like they're somehow going to cause price to bend to their will. Stochastic says you got to go up. RSI diverge. That means you can't go any lower. You cannot go any lower. You might as well just start going up right now. I used to talk like that to my charts. As a 20-year-old, I said, there's no way they can keep going down. It's diverged twice. It's been oversold for hours. It has to go up now. Everybody sees the same thing, so they got to be doing what? Buying it up. And everybody buying it up should cause it to go higher. Yep, that was me being religious about price action. And that was also me losing money. That hard right edge is no longer scary to you because you understand where you're at in price relative to the dealing range, the seasonality, what month of the year you're in, what week of that month you're in, what day of the week you're on, what the economic climate is for that week because of the economic calendar. And you're learning how to navigate uncharted waters. You don't know if there's any rocks just beneath the surface that might strike the bottom of your vessel and cause you to sink, but you're not obsessively worrying about that either. You're exploring the uncharted territory of your future self. And while that is exciting, you have to tame that overzealous nature that, like a child waiting on Christmas morning, they can't wait to get up and see what St. Nicholas left them under their tree. What presents are the market makers going to lay in your hands today as a profitable trade? The market maker doesn't let you sit on his lap and ask for what you want for Christmas. It's designed to consume you. So when you adopt the mindset that cannibalizes retail thought, then you are outside of its reach. You're just outside of the influence and logic presents. It takes more faith to simply study price action naked and study it through the lens of time and price and efficiencies, liquidity, seasonality, all those things that are factual influences. These are things that really have an influence and effect over price, and they can be scheduled. as a time when you're going to engage the marketplace, because there's an economic calendar that you can look at and say, hey, there's going to be a lot of volatility this day. This specific day of the week, there's going to be lots of volatility that day. And if it happens to be on the latter half of the week, well, you understand now that the cleanest price action is going to be where? At the front of the week. And the retail crowd, the casino goers, the gamblers, the less informed street money is going to be out there on Thursday and Friday pressing really hard to try to do something amazing when the market's more likely to do nothing in their favor but hurt them. Take a look at your chart on a 15-minute time frame. Look at the NASDAQ. Wednesday's trading, Thursday's trading, and Friday's trading. Contrast that with Monday and Tuesday's trading. Whole lot different in terms of how price was delivered. Do you want to be in a market that has difficulty? The difficulty in producing. They go in and they're hoping that their harmonic patterns are lining up. They hope that they're seeing their indicators become oversold or overbought. They're waiting with bated breath that their moving averages are sloping in the direction they want to be buying or selling in. Where you are different. You're calm, you're calculated, you're patient, because you know that that given day, there should be some kind of opening imbalance, some kind of difference that's significant from the previous day's settlement price to 9:30's opening price. And to the degree of how much of an imbalance is created by that, you get intel, you get information that tells you more about how that daily candlestick is going to deliver. And you understand that if there is a opening price higher at 9:30 a.m. New York local time than that of the closing price at 4:14 p.m. Eastern Standard Time previous day, if it gaps open higher and it's a significant gap, you know that there is, in the first 30 minutes, statistical probability that's 70% over the last 40 years, that in the first 30 minutes, that your short-term bias should be bearish in that instance, trading down to half of whatever that gap is. Retail doesn't think that way. They don't go in anticipating something like that. Retail sees this. Well, we gapped open higher, so that means it's strong. Let's buy it. If you measure the relationship between where we closed the previous day, and this is something for you guys that like to make indicators in PineScript for TradingView, here's a challenge for you. Ready? Create an indicator that plots a cumulative line. Okay. And you want to plot it with measuring the rate of change between previous day's close to today's opening price. And you can start with a number like, I don't know, use a value like 10,000 or 100,000. And then today's opening price, how many ticks is it above previous settlement? How many handles is it or points above it? And you would add that many to that original starting value. And then every day, plus or minus, you're adding or subtracting to that. And it's creating this cumulative line. Eventually, what you'll start seeing is that's measuring the public's perspective. Because they see, oh, we opened up higher than the previous day's close. That's bullish. And they will want to do what? It's higher. It's strong. Let's buy it. Buy, 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 buy. And that's why I told you on Friday, I'm not interested in being long. To the jokers that like to say I was looking for longs. I was not looking for longs. Absolutely not looking for longs. I was looking for further protraction because it's non-farm payroll. It can deliver that and screw you over. Everybody now knows that if there's an opening gap higher, that's a premium gap. Inside that first 30 minutes, your bias is bearish. Always. You're never chasing that. You're never buying that. Never, ever, ever looking for longs like that, ever. That's somebody that doesn't listen. That's someone taking things out of context. That's someone that's a joker online. Don't take that as a compliment, because I'm not talking like a Heath Ledger joker. I'm talking about a grade A clown, a circus fucking animal. Okay. So when you measure the perspective by looking at where we opened today at 9:30 related to how we closed, the public's perspective is it's strong, it's going higher. Where the professional perspective is, what do we do from the opening price and how do we close that day? That's very telling, because what you can actually start doing is you can get a diametrically opposed measurement with a simple cumulative line. And by doing it on the open to close relationship, you end up with Larry Williams' accumulation distribution formula. But if you switch the logic and you do a cumulative line basis on the difference between previous close to opening of today, you're measuring the public's perspective. What do you think happens? Think now. What do you think happens when you plot both of those lines as an overlay, one over top of the other? And one fails to make higher highs when the other one does. And what happens when the public's perspective, which is the opening price related to previous day's close, is showing higher highs? When the measurement between the opening price to the closing price is saying, I'm not going up there like that. What do you think happens? That divergence is showing you an arm wrestling match between street money, stupid people, uninformed money, and the professionals in the marketplace. See, retail traders are not going in, okay? Now, when I say retail traders, I'm not saying like the people like the YouTube streamers and whatnot, that everybody understands that there's a gap, and gaps tend to trade back into them, but not all the time. That's how I can tell you where there's a breakaway gap. They're not going to be able to tell you which one's going to be a breakaway gap. I have that logic. I can tell you which one's going to be a measuring gap. I can tell you which one's going to be an exhaustion gap. I can tell you where the fair value gaps are going to form before they form in your chart. That's logic that's not found in your books. But let's clarify something. When I say retail collectively are looking at that higher opening price at 9:30 relative to previous day's settlement price at 4:14, always New York local time. When they see that opening price higher, in their minds, immediately they're bullish. They're looking for some kind of continuation higher collectively. Now, inside of the retail classification of traders, there are individuals that know how to fade that opening gap. Some of them look for a full gap closure because that's what they think is going to happen. But not all gaps completely fill in. I'm teaching you that when you're bullish, you don't really want to see a full gap closure. And you don't find that in your books. You find them in all the people that study from me now on Amazon. That's a given now. But prior to 2016, when people were taking my leaked content and turning them into books and study guides and whatnot, nobody thought about just leaving a portion of the gap open and seeing that as bullish when it's gapped higher and trades down to half gap or 3/4 gap closure. Leaving something open, it indicates underlying strength, or in deference to when the market opens lower with a gap lower opening at 9:30, the public perceives that as extreme weakness and it means going to go lower. So their sentiment is immediately established as, let's get short. But the professional mindset, now let's be honest, okay? You're trading as a retail trader, but I'm training you to think unlike a retail trader. You have to trade as a retail trader in a retail brokerage account, but you're not thinking like every retail trader is. So you're thinking like smart money. You are a retail trader, but you're not thinking like a retail trader. You're not falling victim to the nonsense that these individuals subscribe to as the reasons for why price goes up and down. You're not doing that. You're not making those foolish assumptions over price. That because it looks like some kind of animal pattern, some kind of geographic pattern connecting the dots and trend lines, and therefore it makes some kind of a illustration, like a horoscope. You're looking at the real factors why price goes up and down. And if you can measure and compare the relationships on how, on a cumulative line basis, it's a very simple process. If the gap's higher at the open, however many handles or ticks it goes up and opens up from the previous settlement price, that's how much your indicator value adds to the cumulative line. And then you do the same thing by plotting the difference between the opening price to the closing price. And if you do that, what you'll start seeing is you'll start seeing an X-ray view of real accumulation and distribution against the weak-handed public traders. And that's why when we look at these large opening gaps and the market has been building up, like I was describing on Friday in live stream, I said, I would never chase this buying it. I would never go long. I would never go long. I'm not interested in buying it. I don't care if it went up to the primary buy side. I'm not buying that because we already established a huge gap. And that's going to do what? It's going to entice retail traders to look for longs. I'm not looking for longs. I'm looking for the final Judas swing. And when we finally broke down, we started consolidating and created that little tiny little messy little range. I said, I'm going to cut through all this chaff right here and I'm going to focus on this little fair value gap in here. Well, where was the gap? It was gap higher. So the bias is what? Bearish. It displaced lower. And I pointed right to that little fair value gap. I said, now that one, if all things being equal, and if this is weak, if it's bearish, it's going to stay in the lower half of that fair value gap and not trade in the upper half. And you watch that happen. And it trade down to mid gap and sell side. That's the professional perspective. Waiting for the indications that it's finally broke, it's shifted lower, wait for a premium array. And then when it forms, expect the upper half of it not to be traded to. And then the professional mindset is we opened higher, that's a premium. Professionals sell short in premium. They don't buy. They don't buy. So when these jacklegs get on the internet and he posts shit, ICT was looking for longs. You're a fucking liar. You didn't listen to the live stream and go back and watch it again. There's nothing bullish about me wanting to go long in anything I was describing on Friday. I'm looking to fade that. Always looking to fade that. I'm never going long inside of a Judas swing that opens up and starts trading higher. If it keeps going higher, it'll do so without me. That's not going long. But at the moment, exactly when it forms, I'll tell you, and then changes gears and goes lower. But they're going to ignore that. They're going to pretend that didn't exist. What live stream are they watching? That's what's funny. It's right there in front of them. It's recorded, documented. It's not ambiguous. But that separation between perspectives on how the public, the less informed street money, the dumb money, when they're expecting prices to go higher, at the very moment or time when professional traders, the perspective that I'm teaching to hold as smart money, when they see price at a premium like that and they open up at 9:30, we're anticipating a closure at least of half the gap with a 70% likelihood that's going to happen in the first 30 minutes. So they're romancing the uncertainty. Retail traders see that gap opening and are thinking, wow, this is strength. my stock's higher than it closed yesterday. The index market, all these indices are opening higher than when they closed yesterday. The market's up. Let's turn on CNBC and let's hear them talk about how great it is. And you'll hear them talk about it. You never hear CNBC anchors say, oh, we gapped open higher, so it's probably going to start going lower, folks. That's not what they say. They give you all these descriptive terms, stating things like, oh, the market's really strong this morning. Market's really firm. So-and-so number of stocks are up, blah, blah, blah. What are they doing? They're leading you down the primrose lane. They're making you believe the bullshit that you're already feeling inside, the butterflies in your stomach that you think, I'm going to make so much money today being long. The market has gapped open higher, and they start romancing the uncertainty of how much more money they could make. Give me a second here. I'm not sure if you can hear my pups, but they're running around carrying on upstairs. Give me a second. It sounds like my son's already cuddling now. All right, so by having a diametrically opposed perspective than that of the less informed traders, the ones that place their religious belief and faith in things that are external to why price goes up and down, and focusing primarily on when the watering hole will lure the prey, when they're not thinking they're going to be consumed and they think everything's safe. It's okay for me to go down there and get a drink at the watering hole. Everybody's drinking from the watering hole. This is where all the volatility is. This is where all the movement's going to take place. It's gapped open. This gap opens. It's strength. It's underlyingly bullish. I'm going to chase it because I feel like the market's bullish. And who knows how to time the market? So you might as well just go in and start buying it when it's proven itself being strong. And now contrast that with, oh, we gapped open higher. Let me measure how we are opened compared to where we settled yesterday at 414. Where's that midpoint? And you're anticipating that. You're not getting giddy. You don't have butterflies in your stomach when you look for that information. You're not all hopped up on goofballs, and you're not anxious and scared that it's going to fail that day. You're expecting the statistical probabilities to fall in favor like it has in the past. This is where it's most probably going to go. Now, that's not a guarantee, because a guarantee would be, well, just get short if it's gapped open higher. Don't even bother with a stop loss because you're going to be right. You wouldn't do that. But contrast that with the indicator following crowd that sees an opening gap higher and they want to be long. And because they don't know how far it could retrace, they just want to be long because they're afraid they're going to miss the move. They don't put a stop loss on because they romance the uncertainty. It's going to work out for them. Everything's going to work out for them this time. They may have lost money in the previous 20 trades and they're on the last leg of losing their account, failing their funded account combine, losing their funded account, losing the last bit of money in their live account. And they're going to ignore all caution. And they're just going to roll the dice because they're romancing the uncertainty of their profitability. And they're only looking at it with rose-colored glasses where it can only work in their favor. That's what they're telling themselves. They're lying to themselves. And you're not learning how to do that. You're learning how to look at the marketplace and say, well, the markets are likely to go all over the place any given day. You won't have any control over price. But I'm going to go in looking for this scenario. I'm going to look for this type of thing to form in price at this time of day. And I'm going to be looking for weak-handed traders to hold a opposing view to mine. And I will see that as advantage. I will see that as I am about to take prey. I'm about to eat. I'm about to fill my belly with less informed traders' equity. I'm about to consume someone's stop and use it as an entry mechanism. I'm about to take over someone's profitable trade. They will be neutralized and removed from it, and I will be properly positioned to capitalize on the profit run. That's what I train. I train predatory mindset. I'm teaching you how to be a carnivore, not just someone that can run fast and evade being stopped out and taking losses. I'm teaching you how to be the stop eater, the consumer of retail stops, the consumer of less informed traders' equity. It's war or survival of the fittest. That's what this is. And while I don't subscribe to Darwinism, because I think it's bullshit, and even Charles Darwin admitted it was a whole bunch of shit in his deathbed, Darwinism actually does occur in trading. It's the survival of the fittest. And retail traders, by far and large, they have silly little things that they believe in that do not make price go up or down. And they don't even understand when the market is going to be hard for them. And the ones that are the loudest on social media, they're the ones that complain the most when the market's difficult. But you're learning why the markets are difficult. And you're learning that you don't need to be in them. Sit still. Let everybody else go down there and lose a leg, be dismembered and completely torn apart because they don't understand that it's not safe to get in there. And these same individuals that are recklessly going in with over leveraged trades because they want to be able to go on social media and say, look at that guy said, ICT said, don't trade on here. And look what I did. But they're hiding the replay button at the top of their cutout. They'll crop that out and they'll show you the arrows, but they won't show you the execution values because the execution values, you can see that they're not the same as a live execution. But they think that they're getting over on you. Good trade, so-and-so. Great trade, so-and-so. But no live execution, no before the fact, and always market replay. They're lying to themselves and they're lying to people that watch them. I'm teaching you to look for people that are going to have no problem whatsoever showing you live, showing you before the fact, explain why it's going to do it. I have students doing that in the trading community. By far and large, my students, the people that use my stuff, they're the ones that have the balls, the brass, the moxie that go out there and say, I ain't got no problem, I can show you to you. And they're not afraid of losing either. That's confidence. That is exactly what you want. Not, I hope my indicator works. Or waste time like I did for years trying to find the optimal settings. If you're constantly worrying about or listening to someone teaching you how they're going to optimize their indicator settings, if it needs optimization, that's form fitting, and form fitting is bullshit. It either works or it doesn't. If you're constantly having to tinker something, you don't have something that works. If you have a necessity, a need for something, always changing the settings. What's your settings on your MACD? What's your settings on your slow stochastic? What's your period overbought and oversold for RSI or CCI? What did you use today? What time frame are you using? All that is just to make you feel like, oh, if I would use that, then I could have made money. They're romancing the uncertainty. They're looking for the love story and all this stuff. And it's not a love story. It's not. It's a horror story. Every day there's victims. There's always a serial killer. Always a serial killer. It's a slasher movie every single day in the marketplace, especially in that first 60 minutes. You're watching a Jason Voorhees, a Michael Myers, a Freddy Krueger movie unfold every single day in that first 60 minutes. And you have the decision to make. Are you going to be the dumb person that says, that was a strange sound over there? Let's check it out. It's a running joke. You ever watch the movie Scary Movie, where it's kind of like makes fun of all the stereotypical things that go on in movies. And it's true. I have a lot of black friends, and it's like they would tell us when we're watching movies together, they'd like, why is this dumb white person going over there to see what the hell that was. I'm getting the hell out of here. I ain't no way I'm going over and doing that. Ain't no way. That's a peculiar sound. Let's investigate what that is. Oh, hell no. I'm out of there. Well, in retail, that's what they do. Retail thinks like the dumb white person in horror movies. Oh, what was that sound? Let me go investigate that. You hear a whisper, get out. Who said that? Let's go around the corner and see what, get the hell out of there. Something's wrong. Something's wrong. So we look for that. We look for that very thing in traders. Retail logic. Oh, let me see. Can I get devoured and destroyed and have my head completely cleanly removed from my shoulders if I take this trade doing this? If we can identify how retail traders are going to think like that, at the very moment when smart money concepts are saying that's a mistake. That person's about to be a statistic. That's the person in the body count of this movie. It's about the body count's about to go up right now. At this moment, right now, retail body count, it's about to go up because they see this. They're looking for that to unfold when you're looking for the opposite. You're sitting still when you know that the market is unfavorable. Doesn't mean you can't take a trade. Doesn't mean you couldn't get lucky if you got in there and did something. It just means that why would you want to do that? Why would you want to trade on a condition or in a condition where you're going to be more inclined to hope and pray that you're right or have regret that you even pushed the button at all versus this is the right market climate. I have everything in my favor. The market's going to be volatile. It's going to be in low resistance liquidity run conditions. It's not going to be in high resistance liquidity run conditions. That means I'm going to have everything in my favor. At the same time, retail is going to be looking for the opposite. You've checked all the boxes. That's high probability trading. And friends and family, listen. That is not an everyday instance. That is not an every session instance. It's not. It is absolutely not. So when you hear these jokers say, every day is a trading day to be profitable, and they try to entice you to do more than you should. If you're brand new, you don't know what you're doing, you don't have a model, and you don't have the ability to trade on your own steam, that means you don't care what ICT says. You don't care what any of my students are thinking. You're not looking to go onto YouTube or watch live streamers. You're not looking to subscribe to anybody's service. You're looking at your own charts and you know exactly what you're doing. That's what you want. But you may need some sense of community because it's a lonely sport. Even when you're profitable, it's lonely. That's why I was trying to get all my friends and my family members when I was younger. I was like, listen, you should do this. And it's the same thing you see with my lectures. In the beginning, if I start a new lecture series or whatever, the first video, big views, big views. That's the shiny object syndrome. And when they realize, oh, this isn't going to be easy. Oh, fuck this. Let me do something else. Those individuals that stick to it and dig into it and they learn, oh, yeah, not every day is the same. I want to be in when everything is in my favor. I'm not guaranteed that my outcome is going to be favorable. Yours isn't either. But when you do more work in trying to strategize around times of the day and times of the week and what months of the year where the market is really inclined to be favorable, when it's just going to feel so much easier than you imagined it would be, that's simply because you're executing it and navigating smooth waters. You're looking to sail your sailboat in smooth waters with a cool breeze behind you. That's pleasant. That's operating in very controlled economic climates. Doesn't mean that something can't come in there abruptly disturb it, but if you focus on trading like that, your trading is going to be fun. It's going to be far stress-free compared to, I shouldn't say stress-free. It's going to be far less stress than it would be if you were trying to trade every day just because the markets are open and you force yourself to trade through high resistance liquidity run conditions or in non-farm payroll where it tends to stay in a range bound. And every little quick sudden little movement intraday, higher or lower, you're thinking, oh, it's going to finally break out of that range. And then you discover it's not. And you look at how many times you traded, and you wish you would have stopped. You wish you would have never put the first trade on. You should have just listened to that old guy ICT said, don't do this. But many of you are driven by a passion to be able to go out and do something, just to have one instance where you can say, I did something ICT said not to. So there it is. Because what you're really indicating is you're a contrarian. You're a fool for trying to do something like that. But ultimately, what you're trying to do is prove that you are a contrarian, but don't even realize it. And I had students like that in every group. I had individuals that would always try to go against my analysis, and it would hurt them. I took the time to do the analysis like I did on Monday. This is what I believe the market would do. And that's what I was doing in private mentorship. I don't do that for them anymore. They all know how to trade. Whether they choose to believe it or not, I have already taught them. It's in the lectures, and the lectures are now on YouTube. But I would sit down and I would give them pre-week analysis. I would say, before we start trading, here's what I think is going to happen. Yada, 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 yada. This is this, that, and the other thing. This is my goal for the week. This is what I'm trying to trade for. This is how I'd frame my one shot, one kill trades. The one good setup for the week. And then we would all watch it unfold. High 90% accuracy. So you're learning how I don't need to be in there everyday trading, and how you don't need to be in there everyday trading. You're not trying to romance the outcome of everything that you do as a trader. You're embracing the uncertainty. That's different. You're embracing that hard right edge where you know that you have tools and perspectives and processes, protocols that you can follow that remove the need to be right. How many times have you watched that opening gap go back to its mid gap since I now taught it to you? Very few times that it fails to do so, but more inclined to do what? What I said. And I can promise you, over the last 40 years, 4 decades, it's done that. Not just in the NASDAQ market, not just in ES, not just in Dow, but in currency futures, the bond market, the grain markets, the meats, the metals, all of that. Every market out there that you can measure this phenomenon, and it's there. Even if it doesn't have a separation of time like we view indices, like indices have in electronic trading hours, they stop. And they have a regular trading hours time where they stop and they restart at 6 p.m. And then we have regular trading hours starting at 9:30 a.m. It's important to have that information because that information gives you a perspective that the general public doesn't perceive. They don't see it. They may recognize there's a gap, but what do you do with that gap? See, by far and large, the average person that is aware of a gap, they think, okay, well, gaps at the opening generally like to be traded down into or up into. Okay, once it does that, then what? Well, I don't know about that, but you know, this is what we can see. This gaps like to get filled, and the chop is real. What do you do when the gap is a premium gap? It opens higher. We trade down to fill the gap, and then we keep going lower. What does that tell you? Well, I don't know. I do. My students do. You're learning that. But you need something that's going to encourage you in the beginning. And by having something that has a 70% likelihood of panning out, why do you think I want a 75 handle or more opening range gap? What is half a 75? It's an easy 25 to 30 handle run. And that's all you need. Once you get that, you can turn your charts off and go fishing, go to the movies, take your significant other out for a date, go have lunch, go back to bed, play some Xbox and PlayStation, whatever you want to do. Go to the gym because your day's done. Think about how fast the 70% repricing to mid gap went into large range gap. How many times have you seen that happen? How many times have you seen it physically happen just like that. And how many of you thought to yourself, if push comes to shove, if this is all I get good at doing, how's that a failure? How is that not a clear model that could take your fucking ass right out of that job that you're worrying about every day losing, and why you're not getting the raise, and how much more time you got to put up with fucking Carl? This fucking guy is constantly looking over your shoulder asking, so how's that trading going? How's that Forex trading going? You ready to quit your job yet? You gotta be a lifer like me. You know you are. Yeah, your corporate team. Your corporate team, baby. You are never getting out of here. I told you when you first told me this stuff, it's never gonna work for you. Looking at that opening range gap, understanding how it behaves, what you can do with it, will separate you from putting up with Carl's bullshit. You won't have to go and work at that asshole anymore. But you have to submit to the time to getting good at reading it, not over leveraging, but one contract, one of them traded 3 instances over a week. You get two trades, one trade. See what I did there? Approach it back to just one trade, one good trade a week. And it could be just inside that opening range gap. And you don't need to know where the draw on liquidity is right now. You have something that can feed you, put some grocery money in your pocket, pay your mortgage note, or half of it, or a portion of it. And that little tiny victory, that little tiny footing, that sure footing underneath your feet, will give you the confidence and to remind you, you know what? I made the right decision doing this. Something pushed me into this pathway. It didn't happen by circumstance. It didn't happen because of, just, luck. You were placed in my path for a reason. We came together for some cosmic reason. Okay. And all you need to do is give yourself the opportunity to taste it one time, following the rules. And when you do that, you'll have every bit of the confidence to lean back on that one moment, that one instance where it happened in your hands. The bug will have bitten you. You will have been infected with it. Your ICT positive. And you'll go in looking for these types of things, these smart money signatures, and it'll encourage you because you've tasted it. You've seen it happen in your own hands. And it'll give you confidence to go in and keep doing more and more and more. And as you find more opportunities where you follow the rules and it pans out in your favor, it rewards you for following the rules. It does not punish you for being patient. It rewards you for being patient. It rewards you for being diligent and selective and in looking for this weak-handed arm wrestling match against ill-informed people that pretend that level 2 data gives them some kind of advantage, that pretends that volume profile has some measure of importance over price. It has no importance over price. It's only showing you what's already happened. It's not telling you where it's going to go. But understanding how looking at less informed traders and how they think about the market, how they internalize what price is likely to do. And when they get sentiment driven, a gap opening higher, the public's going to eat that up and think it's bullish. And when they start to run up a little bit higher, you're going to smile and you're going to say, I'm not buying that. That's the Judas swing. Because inside that opening range, that first 30 minutes, a Judas swing is going to form. And the gap is telling you right away where the initial draw is going to be. A gap higher, okay, you're looking for mid gap. Is there a range in there for 25 to 30 handles? You have a shoe in easy lead pipe cinch trade. All I got to do is wait for it to come down below a buy sign, balance, sell sign efficiency. If it's gap up higher, once it breaks below that, look for that gap to act as an inversion fair value gap. That's all I did Friday. That's all that was. That was not me painting a fair value gap to go long in. When the whole time in that morning I was saying I would not be buying this. I would not be buying this. I would not be buying. I told you, even if it ran up to primary buy side, I would not be in that long. Why? Because I taught you the opening range is going to be like a black hole, a vacuum that's going to pull price down into its midpoint. And how it trades to that midpoint in terms of the speed, how fast it gets there, and what does it do as soon as it hits it? Does it pierce right through it? Or does it repel back up? Or does it trade down through it and come back up and treat it as resistance, as a premium array, and then sell off even more and go for 3/4 gap closure? So we're not fooled by these assholes on social media anymore. They want to take things out of context because you have documented facts being shown to you in live stream. I'm not ambiguous. I'm telling you what I want to see, what I'd prefer to see, and where the actual PD rates are talking, where they're saying this is what's likely to do. And if you can't see that, you're lost. You're lost and you're untrainable. You're unteachable. I can't do anything for you. But nobody should be able to listen to someone's opinion and not at least watch the live streams, because that's undeniable factual proof that this is something that you can do. The concepts work. I can see it doing it. I can outline it. And you watched me push the buttons this week, buying and selling with the one contract with would be, oh, let's say it's hypothetical $10,000 account, over $3,800. That's 38% in one day, in one session, in 1 hour. 38%. And some of you people come up to me, I made 4%. I made 2.5%. I'm out trading you. You have no idea what you're talking about. Like, that's silly. That's fucking silly. I have students that could literally whip the shit off of anybody out there that talks the loudest that is opposing to my content. I got students. I don't even need to do anything. I say, okay, just try to do better than her right now. Try to do better than him right now. Can you do what they're doing? Because they're doing it right now and they're running circles around you. Again, they're romancing the uncertainty. They need people to support them. They need people to look up to them because they don't have any confidence in what they're doing. They have to have it externally. And I was like that when I was 20. I was absolutely like that. And I'm trying to remind you all, especially you young men, don't do that. You don't need that. You're going to learn how to do this so well that it's fun when you're walking around in the grocery aisles, you're walking through the stores, and these people are looking at you and you're looking at them. You're thinking, they got to go to work tomorrow. They're probably struggling and worrying about how they're going to get their mortgage paid. They're probably worrying about how they're going to get that child, these two babies they're pushing around their stroller. They're probably wondering how they're going to get a college fund put together to pay for them to go through college. They're worrying about things that you're not going to be worrying about. That's a blessing. That's an enriched life. That's a blessed life. You don't need somebody. If you're living like that, you don't need anybody else to pat you on the back so you're doing well. You already know you're doing well. Your life is a testimony to that. And how you think, new money needs assurance and assurity given to them from external sources. New money always does that. New money always looks for instant gratification and the acceptance of other people. Anybody that makes money for the first time, whether trading, win the lottery, they get a good paying job or whatnot, they immediately want to expose themselves to stimuli outside themselves because they want a third party validation, because they can't even believe where they're at either. Like, they can't believe it. It happened so unexpected. They think that it's going to be stripped from them any moment. So they have to live in the moment right now. And that's why you see social media cultivate that mindset. In trading, it's the most toxic thing you can do, because what you're doing is you're teaching yourself to believe that that's what matters most. Other people's perspective and opinions about you and what you think you can do is the only thing that really matters. What other people think that you're worth or what you're able to do is useless. It's useless information. It's wasteful energy. But unfortunately, young men will take that as yeah, I'm a goat. I'm the greatest to ever do it. I'm a king. Come on now, stop. Anybody's opinion of you, whether it be high or low, has no direct bearing on your performance as a trader unless you allow it. Don't romance these little relationships that are laid in front of you where people can worship you or troll you. Don't even give it any energy. Don't give it any energy, because if you spend time in the market and you're looking for your setups, are you thinking about Carl before you put your trade on? Are you thinking about that person that you just can't wait to rub their fucking nose in it? You can't wait till this ends so that way you can say, hey, remember when you told me this, and this? Chances are, if you're taking that trade and you're thinking like that, you're not following your model. You're trading impulsively, like a retail trader would. You're doing something external to the model. You're looking for a reward, an emotional or psychological reward on the other side of that trade, which means that you're most likely not going to see what? When the market stops telling you it's going to continue what you're hoping it's going to deliver to. You won't recognize when you're finally offside because you're holding on to some kind of external proof that you want to give to somebody else instead of saying, this is my model. I'm waiting for it to be in low resistance liquidity run conditions. It's the right time of day. There's manipulation. I'm trading against that manipulation. I'm now trading against what retail would see, and it's the right time to do it. So everything's obvious. It's going to draw to this liquidity. I'm on side. And then when you get the trade on, you're just constantly monitoring everything being equal. You're not looking for some external thing to pony and showcase to somebody. You're following your model because you know following your model is going to yield you positive results. And you're not counting your money before you get it. You're not looking for any reason to run away from your trade because you're uncomfortable. You're submitting to it. Retail romances the uncertainty. They trade this larger position they really can't afford to take as a losing trade if it's wrong. But they believe, what happens if I'm right? It's like winning the lottery. You are trained to not think that way. You're thinking, how can I manage the risk to such a degree that it's the smallest and I can hold on to the maximum terminus target and then let the compounding effect of pyramiding new positions while never really increasing the underlying risk. That is a professional mindset. We don't romance the uncertainty. We embrace the uncertainty. We don't have any control over the market once we enter our trades. But retail is going to hope and pray. They have hope and pray model. Hope and pray model is not a model that is consistent, not in terms of profitability, but it is a model that's it's consistently delivering losing traders, blown out, blown accounts, lost funded accounts, failed combines. Hope and pray model is not something you want to be doing. So we look at things from a time and price aspect where we can say, okay, this is what is reasonable. And we have tools in our repertoire that help us determine whether there's an edge, whether there is a bias, where the market should draw. When the market is created a jaggedness to it on the downside, sell side's been delivered and it's been done with multiple passes lower and they have smooth relative equal highs just above us. That's not complicated. We're not looking for harmonic patterns. We're not looking for continuation patterns. We're not following the trend is your friend horseshit. We're looking for where are the orders that's going to be consumed next. We've already disrupted the market to the downside. We've done that with a lower gap opening. So we have a discount opening gap. We're still inside the first 30 minutes. And there's relative equal highs that are still above half of the opening range gap. So that means we have something we can trade long because the gap is indicating that first 30 minutes bias is bullish. And when it trades the half the gap, then we have to see, does it want to go higher? If it wants to go higher, then we can trust it's going to go where? To the relative equal highs, because it's already done the damage by making things jagged to the downside, and it's going to want to reach for opposing liquidity. That's not a complicated thing. That's not religion. That's simply looking at, okay, yeah, the market's done enough to try to entice people going lower. Every little short-term low has been taken, and that means that they have engineered sell-side liquidity so that way they can buy it at a cheap price. They're not going to buy it at a cheap price and not wait till it goes higher to sell it at a high price. And that's what smart money does. It engineers liquidity. They buy that liquidity if it's below old lows, and they hold it until it goes above old highs. That's it, folks. That's all it is. That's all this is. It's the game of hot potato. Remember, as a kid, is these little games you used to play, red light, green light, mother may I, all those types of things. Well, it's like, here's the hot potato. You hold it, and then you got to pass it to somebody else. That's what's going on all day long. And that's why I called that little drill, that exercise, volatility pinball, because you're constantly banging around, taking the buy stocks, taking the sell stocks, buying here, buying there, selling here, selling there, looking for inefficiencies, the fair value gap, use as your entry mechanism, find a reasonable stop loss, and where's the next draw to go to. And it trains your eye to see it that way. And then when you start trading with a 5-minute chart like that, and then you start trading a 15-minute chart like that, then you start trading a 1-hour chart like that, then a daily chart, and then you look at the market like that through the lens of a weekly and monthly chart, you have an ability to look at time over any given time frame and use the same logic. And then if you can start doing that with a weekly chart, you can see where the market's likely to go to for weeks, not just right now, present week, or the week that you're trading in, or the week to come. Like right now, we don't have the market open Saturday. So applying what you're doing and practicing with that volatility pinball drill, desensitizing yourself to entries, if you start looking for that same idea on a weekly chart, you can see, oh, the market's most likely going to draw down to this old low here. Does that mean it's going to happen in 1 week? No. It just gives you a long-term or intermediate-term draw on liquidity. So that way you might be a buyer or seller throughout the week, but you can anticipate that your larger short positions with the most leverage will be placed on shorts aiming for that weekly draw on liquidity that may be beyond the scope of this present week's delivery. It might only go down a couple hundred handles this week, but you're looking for it to trade down 1,200 handles. So it keeps you in check and telling you, don't try to look for the long that it calls the bottom. Focus primarily on looking for environments where the 15-minute, the hourly chart runs above relative equal highs or an old high, and you're going to anticipate that, setting the next leg for a price lower, delivering to that weekly draw that is going to be way beyond what you think is going to happen just in 1 week. So that's embracing the uncertainty. These are things that are likely to occur, but you're not lying to yourself and saying it can only happen in my hands favorably and not unfavorably. Retail likes to lie to themselves, and they attribute all their success to things that are outside or external to why price is going to go up and down. And that's why they get emotional. That's why they show outbursts on social media, either in tweets and YouTube videos and live streams if they're doing it live. They get real emotional. They get real volatile, or they get real quiet and are angry, or you can hear their breathing, or they'll quickly have to dismiss themselves. Okay, I think I need to take a break now. And they're done. That's not somebody that's in control of themselves. That's not somebody that has a model that they have seen and trust and they believe in. They have something that they're just using as an excuse to get in. Some catalyst that caused them to do something. Just like that girl at the end of the bar. When you're married and you're out there hanging with your boys, you're not going to do anything wrong, but you've been drinking a little too much. And she's giving you that eye, that look. And you're thinking, man, I probably could. And she's thinking, I probably could take more of his money tonight. Then you're going to go down and you're going to talk to her. And you didn't go there for that reason. But now, circumstances as they are, you now found yourself in a situation where you're trading like retail. And you're about to get margin called. You're inebriated. You don't see the risks. You don't understand it. But retail looks for those types of instances where, yeah, let's find out what happens if I do that. And if I'm right, I will say this because my model is good, because I have this indicator, I have this thing, I use the school of logic of Wyckoff, I use this Elliott wave, I use something else, point and figure, whatever. And none of that stuff causes markets to go up or down. And that's why they have to constantly go back into social media to find encouragement. Because deep down inside, especially now because I've been out here preaching against all that stuff, they know that that stuff doesn't work. But they don't know how to do what you're doing. They're only stuck in what they have and their religion. And they are in a cult. You're not in a cult. they are. They're believing things that are not true. They're worshiping people that are not in any position to be worshiped. They're following logic that's flawed. And they're in constant seeking of outside admonishment, encouragement. My community, my traders, the folks that I've trained that now they have their own model, they are the one encouraging people. They're not seeking encouragement. Have you noticed that? I create leaders, okay? Alphas, the ones that want to be the lead dog, the ones that are ahead of the pack. If you're not in a position where you're trying to be lead dog, you have the same perspective all the time. The lead dog's ass is in your face. The scent never changes, the view never changes, and you're always following. I'm training and teaching you all to be alpha, all of you. You're all lead dog. You're not second in command. You're not, in the back of the pack. You're all being trained to see things that way. And what does an alpha do? It leads. It has authority. It has position. It has the best perspective, and everybody else is subordinate to it. That's what you see in my community. My students that trade well, they're out there, they're doing it, and they're not seeking encouragement by anybody else. They are encouraging and showing as a shining example, this is what you can do too. Think about that. Consider who's influencing you. Consider who is holding you back. First and foremost, it's you. It's you. You're always the blame. Always. I was always the blame in the beginning, but I didn't want to see it that way. But when you finally break that cycle of encouraging future failures because you don't want to follow rules, when you break that cycle and say, okay, I'm going to be diligent and I'm going to follow the rules, it's going to be uncomfortable. It's going to be very hard for me to be strict with myself. And I have to do this and not do these things. I have to watch these videos and I have to take notes. And then I have to go into my own charts. I have to look for these things, not just look at his video. I've watched all your videos, ICT, and I'm still struggling. Right. I'm not surprised because watching my videos doesn't do anything. It doesn't do anything. What do you do with the information that you watch? What do you do with the exercises and the things I tell you to practice and go in the charts and look for? Are you doing those things? Are you journaling? Are you back testing? Are you collecting data that shows these things occurring in the past? And you're studying them, staring at the examples and seeing how much time it took for those price runs to deliver to the profitability and terminus, and how often did it return back and show a stop out? Measuring how much all that information collectively over not just one sample set, but for weeks and months, as long as you can collect the data and then make that a practice every single day. Every single day, you should be going into your charts, not going on social media and carousing and palling around and comparing notes and high-fiving each other and stroking each other off. You should be in there in your own charts, keeping your nose through the grind and building statistical probabilities that what you're studying you've seen happen many times. You're not entertaining these other people out there that want to have an opinion about what you're learning, about me, about how good they are. No matter how much I make or don't make, however much anybody else makes or doesn't make, is not making you any fucking money. It's not making you a better trader. It's not going to help you lose less. It's a distraction. It's a monetized attempt to get your attention. That's what social media is. I'm talking to you right now in a medium that I'm not getting paid for on a weekend day, when I could do this in my own YouTube channel. I could talk like this into a video. I could sit there and let you look at me like you were watching me in the Corbs interview. And I could do these every single week. And I could be monetizing them. I'm not interested in being monetized on everything. But if I'm going to do a lecture and it's my stuff, I'm going to put it up there where if I've made the time to take the video and put it together, YouTube's going to make money off of it, whether I monetize my channel or not. So I'm going to take 60% of the income. Thank you. I've earned it. It's my shit. But here, I'm doing it for free. And I already know that dozens of you are going to take it and put it on your YouTube channel. And I've already given you my blessing. I don't care. Do what you got to do. Get your grocery money. It's not an insult. It's not a jab against you. Whatever, you're doing the community a service. But I'm teaching you on how to think. That's what Twitter Spaces really are. That's the psychological aspects, the things that you need to use to recalibrate yourself or establish an initial calibration on how you're supposed to think about yourself, how to correct these internal problems that all of us have, and how to avoid falling into the traps of social media, character worshiping, influencer worshiping, never worshiping me, never holding me to a high standard of, I'm a goat, I'm a king. No, I'm just like you. I put pants on, I take my pants off the same way. I sleep, I eat, I get sick, I get sad, I cry. If my feelings are hurt and I lose somebody in my family, I have all those emotions that you feel. And in the beginning, I cried and I sobbed because I couldn't figure out how to do this. At 20 years old, I didn't have somebody encouraging me like this. I didn't have that. In fact, my uncle switched up on me, spent most of my teenage years convincing me that I should do this. And then when I started doing it and I started making money, he was offended by it. And he never encouraged me. He never said, "Man, that was amazing," or I was awesome. How'd you do that? Can you show me how you did that?" No, he didn't want that. So I didn't have what you have. You have a support structure. You have a community of like-minded people in our community that encourage one another. And they're all trying to see you be better. And I'm not talking about the people that are selling my shit. The people that have a mentorship that has my stuff in it, you should not be paying them. And I don't care if it pisses you off. I don't care if it pisses you off. You can create soft puppet accounts and say, "Oh, well, but you didn't do this, but you didn't do that, but you didn't do this." I'm out here creating. I'm creating. I've already done. You got to do. I've already said before, if I never do anything else, I'm done. I'm set for life. You aren't. You still have to do those things. You still have to keep making money. I don't. And here I am still teaching. Here I am still investing in all of your lives because I know what's coming. You don't. And if you can't be in a better position monetarily, psychologically, and emotionally, it's going to break you. And that means if you have children, they're going to suffer. I'm looking out for yours better and more than you are because you're completely distracted by everything else in the world. You have a job that you have to maintain. I don't. You're worried about losing your job, worried about making more money. Hope you get a raise. I'm not worried about those things. So I have a very objective perspective on life and how the world's working. I'm not distracted by things. And in trading, if you don't do things the right way, you can be distracted by the necessity that you think that you must have profitability every single time. You need to have an everyday model or you're not a trader. That's bullshit. That's a lie. You've told yourself that lie because you've heard someone else say it. And that person that said it, that told you that, is an unprofitable person. You're being influenced by people that don't give a rat's ass about you. They're just monetizing your attention. I'm talking to you right now and I'm not making dick from it. Nothing. Other people are making money off of what I'm saying today. You're never going to see someone work as hard as I am at making you better. It ain't going to happen, folks. Everybody else is out there trying to figure out how they can monetize your attention because they need to make the money. They want to buy their Lamborghini. They want to be able to rent these villas. They want to be able to floss in front of you and say, "Look how great I am as a trader." And it's none of that shit coming from their profitable trades because they have no profitable trades. They have market replay marketing is what they have. And the things they say and the things that come out of their fucking mouth is nonsense. It edifies them through ego and pomp. It is not edifying you. It's not increasing your ability to manage yourself, which is essential. It's important to have those things. But in the beginning, you don't think that's necessary. You think it's all about show me how to get into a trade. How can I put a very small stop loss on and not get stopped out? How can I do that every day? And you wonder why all these jokers that can sell mentorships learn this in 5 minutes, how to have 100% strike rate. That's bullshit. But suckers will buy into that all the time. Why? Because right now everything's painful. It's scary because things are so expensive. And it's going to be more expensive in 2025 and 2026 and 2027. No matter who gets in that office in the White House, we're going to have hard times. I'm not going to be immune to it. I'm going to spend more money than I'm used to spending, but the difference is I have more money to spend. You might not. You might see what happens here in the next 5 to 6 weeks, and it completely blows you out psychologically, and you can't focus because the stress is too high. And trading, you won't be able to focus on trading because you're worrying about external issues that are real tangible issues because you have a family to take care of. You have needs and ends to make meet. And you're going to tell yourself, I need. No, you don't. I have to. No, you don't. No, you don't. None of you have to trade ever. None of you need the next trade to be a winner. That's just you saying that. If you never found investing or trading, you wouldn't say things like that. But because you knew the opportunity is there and you see the influence of other people saying, look at my payout. Look at my payout. Look at my payout. They're doing that because they're signaling because they need attention. They need to remind themselves that it's like a pinch for them because they can't believe they just did that. They cannot believe they just pulled that off. And that's why they're sharing it online. Someone that is come to terms with themselves, they have confidence in themselves. They are not doing, here's how much money I made. Here's how much money. Look at me. Look over here. Hey, hey, you over there. I know you don't even trade, but stop for a second. Look what the fuck I just did. Look at that, bro. Come at me. Nobody cares that much. Nobody cares that much. But if someone will like that comment or retweet it or give you an attaboy, attagirl, whew, that means more than what you just made in money. That means more than what you earned in your trading. Tell me how that makes fucking sense. Some of you are sitting there laughing to yourself like, yeah, that's exactly what the hell's going on when I do it. I never thought about that either. Right. Because your shit's all twisted. Your perspective's all messed up. You're not in the market to impress people. You're not here to impress people. You're not in here to entertain people. You're not in here to measure up against somebody else. You got ends to meet. And when you're making bread on the constant, when you're in here making money, putting your nose to the grind, mind your own fucking business, making money, you don't give two shits what people think. You don't care because you've been doing it. It's an everyday thing. It's another fucking Tuesday to me. Okay. It's all it is. It's another fucking Tuesday, nothing different. It's a different paycheck, a different income increase. And I didn't have to do anything different. But you complicate the things emotionally and psychologically by inviting other people's opinion about what you did. If you know what you're doing works, why are you posting what you made? Because you need that stimuli. You need that little soft hand touching the back of your hand saying, you know what, honey, you just did something real impressive. Any chance you and I get hooked up? Because I've been looking for a man like you, and you seem to have a mastery over money. I need a daddy. I need a daddy in my life. That's what you want. That's what you young men want. You want that shit. When you should be out there looking for a woman that makes her own money, because that's sexy as fuck. Find a woman that can carve out 6 figures or higher in her own hands, and she turns to you and say, you know what, you're attracted to me. When you're making the same kind of bread or more, that is a match made in heaven. Because if one equity earner is greater than the other, and it's the female, little dick complex comes out. Men that trade with less ability than a woman that can do it, that is a failed, doomed relationship. Women, take note of that. Men, fix your shit. So instead of looking for someone that's lesser than yourself so they can look at you and say, I need to stay with him. I'll do all his bidding because he makes a lot of money and I want to keep him because he's my daddy. That's not relationship security. That's a problem. You have a dependent. Fuck that. You want a strong partner. You want a financially strong partner that's not going to lean on you because they need you in codependency. You want them to encourage you and feel like, you know what? They're not here for what I have, but they're here to invest in what we have, what we can put together as a corporate entity, as a family element, a unit of unity, not taking something from somebody else in the relationship and saying, well, that's the way it works. He makes more money, so therefore he should. Fuck you. You don't owe that woman any more money because your relationship